Hello, everyone, and a very warm welcome to today's Major Markets Update, Wednesday, April the 26th, 2023. Are we breaking down, or is a big fat bottoming process going on? Let's have a look at the charts, but before we get there, let's review what we wrote on Saturday. All right, on Saturday, S&P 500 has been a three-wave structure over the past 2-3 weeks, which led to a lot of uncertainty assessing the charts, but the parameters were still the same. Support was at 4,085 and 4,070 range, and resistance at 4,160. Forget the resistance. We said if we break support, we are likely in the wave 4, already targeting 4,040 plus minus 30. Today we bottomed, I believe, at 4,039. Reached. No surprises there. That was the trigger, and that's where we got. Unfortunately, I could not give a high odds setup saying this is what is going to happen because of the three-wave structure. However, for the NASDAQ 100, although it was still range bound, we knew that the ending diagonal C wave was the preferred one to 12,800, 12,850. Yesterday, I believe we got to about 12,700. Bingo, reached. It doesn't get any closer. No breakout, forget about it. Our preferred view was lower. With that, we should probably have had a lower view for the S&P 500 as well. But in this market, I don't take anything for granted. Things can go up and down in two different indexes at the same time. Today is, of course, evidence as the Dow Jones cratered between parentheses and technology was higher. Dow Jones, we remained of the point of view that it was in a wave 4 to ideally 34,000, 33,120. And that was reached already yesterday, and today even better, as I think we bottomed somewhere around 33,300. It doesn't get any better. So we could have completed already on Thursday, we thought, but it didn't happen. So we're stalling right there where we have to. So now we need to see a breakout, and we need to see higher prices and not go below the 33,120. I wanted to say that the market has stopped following the pre-election year pattern, which is bullish from about last week into May. But it's back to the average seasonality pattern, which is bearish until late April and then bullish. I'll show you that in a minute. And this is why I always say we are not going to hang our hat on these average seasonalities. They're just averages. It is, in this case, 36 years of data and combined. And I'd honestly really like to see the standard deviation so we can get a little bit more of a certainty for a certain low or high to see how wide the range is. Bottom line continued. So these are the levels to watch for your trading. We go over 4,070. And then we reach 4,090 plus minus 5, over 4,090, 4115, etc., etc., etc. Conversely, we go lower, then eventually we can reach 3,900s if we drop below 4,010. I see a big gap, then we can drop real hard, real fast. Now today, the bears got their first warning for the NASDAQ 100 because we traded over 12,875, which was the previous A-wave low. Now we must hold yesterday's low and break above today's high to trigger the next rally. Hopefully with some good news, I believe, on Meta stock, Roku stock. There was another tech stock that did pretty well on today's earnings. We can get that higher high, higher low set. Over 12,975, targets 3050. Okay, I know it's not much, but that's just the next level of resistance. Above 13,050, we target 13,200. Above 13,200, we target 14,100 for that last gasp higher. The Dow Jones must hold this support zone. We have enough waves in place to consider this potential wave 4 complete, right? It's a potential. It has not been confirmed. So we have, if you'd like to go long, for example, very clear, defined stop loss levels in place. We must break above 33,890 to confirm that the wave 4 has completed. There is positive divergence from extremely oversold levels developing on the short-term time frames, the hourly, the 5-minute, etc. That's often a sign of a bottom, but it is a condition of a signal, so we need to see price levels break. But given how oversold things are, with this positive divergences, it does mean we're getting much closer to a bottom than to a top, right? Please keep that in mind. Again, I know everybody expects to know everything but that's impossible. We're about 70% reliable, 95% accurate. So again, if we are looking a week ago to 12,800, 12,850, it's on there, and we got 12,700. It doesn't get any more accurate, right? That is your accuracy, and that's all we can provide. But we also know that when the data changes, we change accordingly. There's no difference. We anticipate, we monitor, and we adjust, because we're dealing with a dynamic, stochastic, probabilistic environment. Trading doesn't get any more difficult. It's as difficult a profession as can be. As I tweeted today, it takes 10,000 hours to get good at something. So why the beep do people think that as soon as I open a brokerage account, I'll start making money? Forget it. It takes you just at least 5 years, because you work on average 2,000 hours per week with no vacation. All right, no vacation, 2,000 hours per week. So you need to work on it for 5 years before you can even make realistically money. So if you think that you're going to make money tomorrow because you just open a brokerage account, go peep yourself. I gotta be very, very rational, very realistic expectations that prevents delusion, frustration, and all those bad things. So if you can do it in about 5 years, when you get good at it, then you're great. Good things take time. So you must follow the process of, to change your evidence, you change accordingly. Please remember, trading takes a long time. Please remember the importance of stop losses. I can't say it often enough. And then we're going to go into the Elliott wave, all that good stuff, study them, learn them. Don't just rely on me, okay? I'm just one of many tools you need for your trading. And I hope I am a great tool in your toolbox and the go-to toolbox. But in the end, it's you who needs to push the buttons, not me. I just forecast the markets, and I can be wrong, like everybody else. My thesis is wrong to prove it right. And that said, onto the chart, rant over NASDAQ. So we're still stuck here between a rock and a hard place, all right? Meaning we have no meaningful breakout, we still have no meaningful breakdown. We bottomed for the NASDAQ a little bit below where I would have liked to see it for a standard flat, an A, a B, and a C, which be a standard flat. Could potentially have been last Monday, or not this Monday, a running flat, but it is turning into a expanded flat. As long as we know that it's a flat, then we have regular expanded or running flat to choose from. And the market decided to make it into a expanded flat. As long as we hold yesterday's low, we can reach on a breakout 13,100. That's where this red A, all right, sees a 13,100, and we have the bull flag pattern. Now the bull flag pattern is a little bit negated, but okay, we'll go for it for now. We continue moving lower, especially below the 50-day moving average, then the 200-day moving average is on tap. Things will start to look more dire. On the short-term time frame, this is a way to look at it. Then we have this A, B, and now in this wave C, which should have completed yesterday. Okay, then we have potential wave 1, potential wave 2 at today's low. And if we break out above today's high, then we have a wave 3 setup, or a 1-2-1-2 setup in place, akin to what we saw here mid-March, 1-2-1-2. To be determined, okay, don't know it yet. We got our first warning. This was the first warning level, 12,875. That was the A wave low. Now we have overlap. Okay, we have overlap, which starts to suggest this whole decline that at least started here at 12,975-ish is over. Okay, but we need to now see subsequent breakouts. So first warning given to the bears. Second warning, 12,975. Third warning, 13,050. That's why we anticipate break above this level, we go to that level, etc., etc. Baby steps. But as you can see, we have bottomed so far in this bottoming zone, just as we topped in this topping zone. This is what we forecasted late March. We topped there. This is what we've been forecasting for quite some time. I've had these levels on the chart for quite some time, days to weeks. So we've reached it. Is this still a diagonal? Yeah, it looks like a diagonal with classic overthrow. I have a very hard time counting this anything else than as I'm showing. Third wave target reached, exceeded fourth wave target, but did not go above the second wave. So far, so good. It's all so far ABC's lower. So I like it. And I'll stick with it until proven otherwise, which is below yesterday's low. Dow Jones, there we have it. Much deeper in the ideal wave 4 target zone in red, in green, and in gray. So as you can see, we now need to hold these levels and break out. So if we break above, this is, I think, Monday's, today is Wednesday, Monday's high, that's about 33,900 something. It's on the slides. Then I think we can start to look for wave 5. This is the short-term wave count. Again, the red arrow is what we had on the map since early for April, sorry. And that is still underway, but of course, this one is still not there, but hopefully we're going to get it. And we know the price levels to watch. They're on the slides. We're deep inside the bottoming zone, both in red and both in green. Okay, look at that. The wave 5 should have bottomed at 33,215, and we got 33,235. That's off by 20 points on 33,000. That's nothing. Now, I want to point out that money flow is getting quite low. The last time it was this low was March the 13th. MACD is not really there just yet, but as you can see, we're almost negative. Now, NS1 might not say much, but we also have here potential positive divergence to content ourselves with. It can last longer, as you can see here. Okay, so we might still go a little bit lower. It's fine. I'm not too concerned about it. If that's the case, then we simply look for another set of 4 and 5 waves to go. But we're getting quite oversold. Okay, getting quite oversold on many technical indicators, and the positive divergence is kicking in. Now, since we broke below the key levels to hold, 4,085, the last wave 4 of a potential expanding ending diagonal is off the table. We knew that already, so then we had to assess different options. The other one is that we already completed this expanding ending diagonal. 1, 2, 3, 4, 5 counts really well. I have no problems with this one. And now we're in this complex correction, as you can see here, with 1, 2, 1, 2, 3, 4, 3, 4, and now in this wave 5, again in the ideal local bottoming zone. Please remember, as I stated, if we break below 4113, we go to 4,085. That was this orange arrow. Haven't changed a thing, and we reached it. Okay, below 4,085, we knew we would go to 4,070 into the local bottoming zone. Reached it. Okay, so it's really not rocket science. There's always, of course, a chance of false breakdowns, but for now, it's been working great. We bottomed in this ideal 3, we topped in the ideal 4, and we're now in this ideal wave 5 target zone with potential positive divergence from extremely oversold conditions. As you can see here, we're reaching close to the March 13 levels on technical indicators. Can always go lower, but so be it. Here is a slight different way of interpreting the price action. We're going to get 1 more 4 and 5. Okay, so you can see here I have placed the A and the B a little bit later in time versus earlier in time. It's really a matter of interpretation. This would suggest 1 more 3, 4, and 5 setup. We need to see above 4,090. Then this wave 4 started to get too big to know that, okay, we probably have already completed wave CO4. Positive divergence is developing again on the hourly time frame. And this is a whole other way where we have then wave 3 all the way back here in early April, an A, a B, and now it is wave C. It's 1, 2, 3, 4, and a very extended wave 5 of also the expanding diagonal. It would work well. It's a 3, 3, 5 diagonal. Some people say it can be 3, 3, 5. I can show you diagonals which are 5, 3, 3, 3, 3s, or 3, 5, or 3, 5, etc. There's many variations out there. Mr. Elliott, unfortunately, back in the early 1900s, didn't have much information about diagonals. And the market since 2009 has been rife with diagonals. And I think there's a whole new line of evidence available that diagonals are highly variable and can be any combination. And I can have 100% proof to show you if you do not trust me. Anyway, this wave count, it's not my preferred one. So this is why it's number 3. Has a very short wave 3. It's shorter than wave 1 because wave 1 should have topped here at 4130. Well, we got to 4120 something. So it's shorter than wave 1. End of story. This means that if we're in wave 5, we can only reach 4265, 4285. It's fine. It kind of matches anyway with the other upside targets. And this assumes that the current wave 5 or 5 of CO4 has bottomed. Right? To be determined, we have the price levels on the charts to make sure we know we have a bottom in place. Below today's low, we're going to go a little bit lower to the 4,040s, etc., etc. Can't even reach 4,000. I'll show you things in a minute. So yesterday I wrote the price action over the last 2-3 days has opened a can of worms for the S&P 500. Now the S&P 500 is a hybrid index. It means it's kind of stuck between the Dow Jones and the NASDAQ, right? It kind of combines all sectors of the environment, and it's of course a large cap index. So it's not always the easiest one to interpret. The Dow Jones and the NASDAQ/NASDAQ100 are technically easier to interpret. So that then means we can look at some larger, bigger picture Elliott wave counts. One of them, and a member of mine has shared that with me, is that we've already topped for this B wave in some sort of triangle. Now, I rebuted this because this decline here from August into October is 5 waves lower. It's 5 waves on pretty much every single index. This is 1, this is 2, this is 3, this is 4, this is 5. With wave 3 subdividing very nicely, 1, 2, 3, 4, 5. And we have 5 waves lower for wave 8, 1, 2, 3, 4, 5. So I have a very hard time seeing this as 3 waves because it's a triangle. It has to be 3 waves. Okay, a little bit of overthrow, so it gets a little messy, and we're getting already quite oversold. So this would suggest wave B as topped, but it's not my preferred one, especially because this decline is not what it should be. It's 5 waves, not 3. But we'll keep it on the map just in case. All right. I just don't like it. So here you can see the clear 5 waves lower, 1, 2, 3, 4, 5 for 1, 2, and 1, 2, 3, 4, 5 for 3, etc. Okay. And this suggests we're in a triangular B wave. Then we have A, B, C, D. We topped for wave A here already in November. And now we're in this triangular B wave, and we're going to go all the way back to the 3800s. Yeah, it's possible. All seasonality and all correlations aside, this is a bear market and it does what it wants to do. I will not know until we break below pretty much the 200-day moving average. So this is a potential. I want to show you all the things that I'm tracking. This is stuff from other people as well, because this is not my preferred wave count. We show you how confusing the market currently is. It's absolutely not clear. So please count your blessings if you're making money in a very unclear environment. Just making sure we kind of get it. And the most bearish one is this. We've already topped for wave B. It's akin to, of course, the first bigger picture wave count, but then the wave B was already in January. And now we are dealing with a wave 2 here. So far, only 3 up, 1, 2, and then a 3. And we break below, I would say, not the floor, is now, of course, here. We break below, of course, the wave 1. This is the floor. It's confirmed with, of course, many more indications higher up. So this is the most bearish one, and we're going to target into the 3200s, possibly 2860s. Still on the map, hasn't changed, okay? Still on the map is the potential, tracking it, just to make sure. What I don't like is that the wave 2 almost retraced 100% of wave 1. That's a bit uncommon. Normally, it's about 50, 60, maybe 76.4%. But going to about 98% is quite uncommon. So that's why it's last on the potential map, so to say. And this is then the wave count we've been tracking, the 1, 2, 1, 2, 3, 4, 5. So far, 3 waves up only. And this could then also morph into a diagonal C wave with this wave 5 to come. As you can see, the top here fell even short of 41.90. And the cash market only got 41.73. And now this wave 4 normally bottoms 41.40, 4,050, assuming a standard impulse. Since we don't have a standard impulse, the wave 4 is likely going to go lower. And then this wave 5 is likely to go higher. But again, you see here 42.85. That matches quite well with what we see here, 42.65, 42.85. So it's still possible. Okay, so there's some stars aligning, but we need to see reversals, and we have the key levels to watch, especially 41.40 needs to go for the bulls. So that brings me to seasonality. So this was the average pre-election year seasonality we're tracking, with a little bit of weakness here, but pretty much bullish tendency, and we don't see it. Instead, what we're seeing now is more of this, that we're bottoming here into late April, and then we get to it. So the market might have decided to use average seasonality instead of pre-election year seasonality. This is, I always say, not something we want to hang our heads on. As I said, it's an average. So let's see how this is going to work out. I don't like it that it's switching, but the market doesn't have to follow it, okay? It's an average, so there are plenty of years that behave differently. That brings me to the 52-week new lows and highs. So far, it says we have less 52-week lows, new lows, compared to yesterday. It's a little strange. I want to see the data tomorrow. But so far, still nothing too out of the ordinary. But definitely the NASDAQ was warning here with those levels above 50 for many months in a row. So this is our sell buy indicator, and it's been on a sell since mid-April. And I think it remains on a sell. If we start bottoming out in the ideal bottom zone, we know we're getting much closer to the bottom of this decline. Then let's have a look at our PMO data. It's highly negative now, minus 50. So the bears are in charge. I'd like to see it ideally drop all the way to, of course, the triple digits, but anywhere in the minus 60 to minus 80 will do for a tradable bottom as well. So that means, of course, the summation index is now declining, and I've warned about this previously, that things were getting a little bit too frothy, too much overbought on the relative strength indicator for the summation index. Summation index is the McClellan oscillator that I just showed, added to that one from yesterday, etc., summing it up. And as long as it keeps rising, it means more stocks are advancing and declining, and vice versa. And we had, of course, already warning here for a bottom in place, very oversold, just as we had here late last year, and now here again in March. And now we're potentially topping once again. So that doesn't look too great. Then I want to highlight a nice webcast by Xenia Taubina on the bigger picture. I'll share it in the email today. Have a look at it, and you kind of can see maybe she's seen different things, but it's available on Twitter. It's for everybody to share. And I like that for you as well. Sharing is caring, so please have a look. And that's all I have for today. It's been a long webcast, lots to cover, because we are in a bear market, counter trend rally, zero indication of a new bull market, nothing. You can throw all those comparison studies out the window, where we look at what happened in the 50s and the 60s and the 70s and the 80s, and what then should happen today. Because in my humble opinion, we are in a super cycle 4, which is of a wave degree that has never happened before. So we can't compare anything. So I don't want to do these historical pattern comparisons. I'm sure they're still valid. There's, of course, everything is important in the market, but I think those ones will often start to fall apart a bit if we start to be in a whole different market regime that is incomparable. That said, have a look at that video as well. I'll share you the link. So you have lots to watch. Sorry about that, but hey, you know, it's cool to see what other people are doing. I hope you appreciated this long webcast in great detail. Price levels to watch, it's all there. Take care, trade safe. No updates tomorrow. I'll catch you all on Friday.